Good evening, ladies and gentlemen. This is Cruise Trading Frank. It's approximately 9:06 p.m. Eastern Standard Time, as I like to say, on an absolutely gorgeous evening here on the New York City, New Jersey waterfront. And I have absolutely no idea why you guys are actually going to listen to a webinar when you should be out there having a nice drink on, somewhere nice out there. But that shows the passion of people who are serious about making money and doing what they need to do. Globex futures have begun. I was monitoring them for a bit. That's the reason I delayed the session by about an hour to see how they settle. And they're looking pretty okay. So bottom line is, PB, don't write personal stuff on the thing because everyone can see it, okay? But congratulations, that's big news, man. All right. So, but don't put any personal stuff on the dialog box on the thing.
Sorry, I thought that was a direct message. I'll make sure I undo that.
No, that's okay, but that's fantastic, man. God bless you. That's what life is all about. But okay, so to continue, this is a free. Well, obviously, this is a weekend update. I don't like doing long-winded, written blogs and opinions and all that stuff. I'd like to do things on a visual basis, and this is what we do. We call them video casts, video blogs, whatever you call it. Session will be recorded, uploaded to the YouTube channel, which is a Clue to Say Trading YouTube channel, which is accessible to everyone and anyone who's not even a member. So go out there and spread the word. So they listen to it and they like it and they join us as paid members. And so that's it. Full disclosure: this is purely for financial education, not for any solicitation or advice. And we shall begin. So, first of all, welcome. We have two great new members, Lisa and YBI. I'm not mentioning YBI's full name. And we have PB, who's been a member for a while now. So that's it. So tonight's topic is really an open-ended one, and that's what's next. And that's what we're always doing. We're trying to figure out what's next so we can get an edge on what we're doing and where we're moving from. Now, I will say, as a good shout out to a new member, Lisa, she's shown me some of her charts and stuff. Very impressive. Looking at a lot of right indicators, many of them that I'm seeing, that I monitor and have shown many times, and coming to the same conclusion that I do on a short-term basis. So before I go any further, one of the things that I like to do is make some broad points on the macro picture, which is away from technicals. The macroeconomic and political picture that dominates the markets and affects things that are going on a daily basis. So on that note, let me start. First of all, let me just be very clear about one thing to everybody, old, new members, and seasoned traders and amateur traders, and I don't know who's a seasoned trader or amateur trader because even after all these years, I consider myself to be an amateur every morning that I wake up because the market's throwing me curveballs that I have to navigate. So that's just the way I look at things. So from a standpoint of that, let me just be very clear about one thing: technicals alone, even though I give it a lot of weighting and on my trading models alone, it will not give you, will not make you reach the promised land. There is a variable, in my trading universe. There are multiple components which are in the picture. So first and foremost, I give a lot of weighting. I'm not putting numbers on this one, but a lot of weighting on my technical and tactical aspect of what is going to happen to the markets and how we're trading the markets. The second aspect is the fundamental aspect. You have to understand, and the fundamental meaning the economic aspect, the noise, the political background, the Trump tweets, the China announcements, the North Korean stuff, all kinds of stuff going on. European rate announcements, Mario Draghi, Brexit fights in England, all kinds of things. That's a macroeconomic variable in the equation. So the first one is technical. I give a lot of weighting to. The second weighting that I give to is the fundamental economic and political backdrop. The third weighting that I do is, and this is not necessarily in in an exact numerical fashion, is the behavioral component, which is what is the market feeling, what are investors feeling, what is the institutional guys doing, uh, are the Wall Street analysts very bearish or bullish, what is the retail investor feeling and doing, which is the easiest one to really figure out. Somebody at the dog park today asked me, well, why do you think technicals are so important? And this lady works at JP Morgan investment banking. Okay, so you think she knows a lot. She has absolutely no freaking clue about the markets. She's in investment banking. They're just about cutting deals and getting companies public, or doing a secondary offering and all kinds of stuff. So I said, when was the last time you asked somebody, one of your friends, is the market going up or down? I can assure you, almost guarantee you, that's the only thing I'll guarantee. They'll tell you, no, the market's very overvalued and it's definitely going to come down. And she started laughing. And she's a very smart lady, young lady. And she goes, and I said, exactly. So that's it. The behavioral component is that the majority, regardless of what numbers and sentiment surveys and stuff that you see, are bearish or scared. They are terrified. It's always been the case like that since 2009. Trust me, I've gone through the whole cycle. 2009, S&P 500, 666, March 9, 2009. I'm sitting at my desk watching the market plummet and then turn. Did I call the market? Absolutely not. I'm a freaking idiot. Okay? I'm just doing my thing. Institutional money management, all that stuff, trying to explain to my institutional clients and high net worth clients that I know what I'm doing. But I did have a very keen understanding of the markets. It took a couple of years to figure out what was going on. And even to this day, one thing that never changed is everybody thinks the same way. So you can do all kinds of indicators, all kinds of number or things and try to convince people, but the average person out there, the mom and pop, even the institutions, even the analysts, they're all scared. And here we are punching at this level here, which I drew weeks ago. These charts have been constructed weeks ago. And yes, I tweak the lines once in a while. I mean, once in a while, like, not every day, but, every other day. This shaded part is the Fibonacci base. And I'm just showing you the simple one, investing.com stuff. And this is where we are. We're punching right there where we were back on, look at the date back there, June 22nd, 2018, which seems like an eternity ago. Because in between that, we have had this whole big, huge volatility range, structured volatility, not random volatility. It might seem random while it's happening for the untrained eye or the untrained trader who likes to think that price dominates all action. No, it doesn't. If you just follow price, you're going to get nowhere. Of course, it's a determinant, because if whether you're going to make a loss or a gain depends on your price of your option of the stock that you bought. That's fine. But if you're going to do some predictive and analytics, i.e. forecasting, price will never give you the right determination. There's a lot of other stuff that goes on behind the scenes. So that's the truth, which no one really wants to accept. So the behavioral component is very, very important. I'd like to put the behavioral component right on the first part of my equation, but I don't do that for the simple reason that the technical aspect of structuring charts and showing where the markets can go and where the algos and the algorithmic high frequency trading black boxes want, not all of them, but majority of them, the powerful ones, want the market to go. It will go there. Now they also have their behavioral component, right? Holy cow, we're breaking out right now. Look at that. You're seeing it. You're seeing it right now in front of you. This is a live chart. Bing! Pop. Every single line. Now, this is a major breakout that we're experiencing right now. Futures are up 9. And can somebody tell me why futures are up 9? Can you attempt to tell me, please? Because there's a lot of smart people here. Dano, welcome. Can somebody tell me why we're having this pop, aside from the fact that I said we were going to have that?
Asia opened up.
What was that?
I said Asia. Asia opened up.
That's a consequential fact. But why are we moving like this? Given the fact that North Korea said to us, like, they just flipped the birdie again, right? We did. They did. You know that over the weekend. Look at my Twitter
Mm-hmm.
feed. Yeah. The fact that the Trump administration basically shut out $10.4 billion worth of payments to the health insurers. God help us, what's going to happen to United Health tomorrow, and all these, and all these different uh, uh, companies which rely on the government to subsidize them to a certain degree on Affordable Health Care Act or Obamacare. What's going to happen to a whole bunch of chronic condition patients whose premiums are going to rise 100%? I don't think it will, but there is one reason why this is going on, and this is where Clueless Trading shines. Honestly, I'm not making up this stuff. I think that's the reason. And I'm going to give you a clue, and I'm going to see who's going to. Shorts are burning. That's not a reason. That's a consequence. This is like a Harvard psychology class, guys. This is from my days back in college, where I'd put my hand up, trying to be the teacher's pet, professor's pet. Like, oh, I know the answer. I almost flunked calculus. I almost flunked biochem because I was supposed to be a doctor, by the way, because my whole family were doctors. And by the end of freshman year, I'm like, no friggin' way I'm going to be a doctor. By the time I reached organic chem, Chem 206 at Boston University, I'm like, that's it, I'm done. Economics, business, marketing, international finance. And I was just like, those things were coming naturally. So aside from my little, history, can somebody guess why this is happening? I'm going to give you a clue. It's happening because of something that's happening in Europe right now. Something that happened over the weekend. I don't know if I tweeted that yet.
Oh, is that where they've decided on the Brexit exit?
They have
or how
what?
to exit, I guess? Didn't they decide on a passive exit from Brexit?
Okay, you're very close, man. So you're very close. They have a major issue with the actual form of Brexit. Congratulations, Mr. PB. Yes, Brexit in its truest form, the way they started it, was a disaster. And trust me, I know England. I know London. You'd like to talk, have me talk English, darling. Okay? Businesses hated it. Theresa May thought that it was going to be a simple way. Brexit's been going on since 2016. Remember, we played the whole Brexit thing. And I said, guys, relax. If you want to listen to my videos from that time, Lisa and Miss YBI, go listen to it. You'll be thoroughly impressed. Like, whoa, this guy said that? Because we fell hard during that time. They said it was the end of the world. I said, chill out. Brexit in that form is not going to happen. So you are dead right, PB. The Brexit is morphing into a form that is going to be business friendly. And any of you out there who are like hardcore, like, oh, Brexit is great and the trade war is great, this and all that stuff. And it's coming from somebody who's a hardcore conservative Republican, fiscal Republican, who doesn't idolize anybody who's out there, but idolizes American business. I idolize American business because I do believe that American business CEOs and leaders, we are the most transparent, we are the most fair, we're the most honest when it comes to business. In politics, they're all crooks. I don't care who it is. They're all crooks. And that's the nature of politics. They're trying to get votes. Okay? And this is coming from somebody who is not some snowflake liberal. It's coming from a guy who is a true sense conservative when it comes to the way I look at things. So yes, you're right, PB. In its truest form, Brexit would be a complete disaster. It is, like you said very correctly, a passive Brexit, where businesses would be able to communicate back and forth between the EU and all kinds of stuff. And I don't want to get into the intricacies of it, like, oh, is the Irish border going to be open, and blah, blah, blah. Is Irish whiskey going to be like taxed less, which would be nice, right? Are the Scots going to stay? Well, knowing that PB is from that part of the world, are the Scots going to remain in, as a part of the island of the United Kingdom, or they're going to, have their independence, blah, blah, blah. The fact is that, yes. So, ladies and gentlemen, this is what's going on right now. Does this mean we're going to the moon, like they say on StockTwits and so other trading forums? No! It simply means we're having a breakout. And the shorts, like my good friend Dan was saying, are burning right now. This is dangerous. Because instead of having a small hedge on the VIX calls that we have, which I'm down 60% on. Anybody who followed me, they bought them at like 90 cents a dollar. They're down to like, 30 cents or something. That's called a small hedge. Imagine I went like nutty and they said, that's it, guys. It's all over. The tariff war has started. The trade war has started and Friday's going to be a disaster. I didn't say all that stuff. We kept our longs. We traded the longs intraday as well as overnight, as well as intra-week. Neither did I say lump up and buy everything in sight, because this is going to happen. Because that is the essence of what we do here at Clueless Trading. We don't go nuts. We don't go euphoric on one side, and we don't go depressed and maniacal. And start taking Prozac on the other side. Try to keep a balance. And we like to see how markets act at certain levels. So, bottom line is, there are a lot of negatives that happened over the weekend. Nothing that crazy. I knew the North Korea thing wasn't going to be a market killer. That's kind of, the waiting is less. But the fact is, we didn't hear anything out of China this weekend. Did you guys notice that? We didn't hear any sort of big announcements coming out of the Premier Xi Jinping saying that's it. He's done and he's going to really go nuts. That wouldn't be that good. Trust me. I don't care what you think. He's a nice guy. He's not powerful. He is powerful. And if he did something like that, we would be down 15 points, 15 handles on the E-minis right now. So this is a cause of the global effect that is playing out, because it is going to be, I'm going to quote PB's word, quote, a passive exit. And if you guys, what all of you guys do, understand proper English, that means a soft exit. Brexit, where there's going to be, back and forth negotiation. Everything should be negotiated. The art of the deal, as good old Donald likes to say, and sometimes he doesn't do it. Okay? So, saying all that, that's what's happening. So let's not go through it. So from a technical standpoint, at this point, what we have here, and I used the reference point of, I can go back, this is a 1 hour chart. I'm going to look at different things. So I looked at the reference point that from back on the 13th of June. That's my last reference point. Somebody can use anything back, as I zoom out, as we will be doing, then we'll be seeing further and further points where we can go or not go. I do not believe in confirmations. I do not believe in, just to say, I don't believe in complete breakouts. I don't believe in complete breakdowns. I used to, in the days that the machines didn't control the market. Because humans have a tendency to stick to their convictions. Right? I know it's right. We all do. So, a child doesn't. The child can change their mind any minute. That's called algo HFT volatility. But as we get older, we tend to get entrenched in our beliefs. And that means that we tend to basically work around those beliefs, and that means that technical levels tend to be easier to read. No longer, because the machines, which have been programmed by a bunch of guys who have no ideas about the market, they are looking at all kinds of momentum stuff, price movements, all kinds of algorithmic moves, program these moves. So given where we are right now, if we think that this is a confirmed breakout, don't bet on it, because right now we have a minor right there. You can see that it's already happening. We hit the 2771 level, which I showed on my SPX chart. I'll show tonight too on the E-minis, and then we had a inverted hammer, which means boom. And that inverted hammer right now is testing. It's almost disappearing, right? Look at that. Disappeared almost. Testing that breakout level right there, which was 227.66. Do I think that it's going to completely turn red right now and become a real inverted hammer and come test this breakout level right here at the start of the Globex trading at 6 o'clock right here? Yeah, it probably will. And it should, if you ask me, because that should tell us whether or not that is a viable support level. Otherwise, it's just a spurt as the shorts got squeezed. So this is a short squeeze candle. So these are a lot of the technical stuffs that we look at. And as you focus on charts more and more, you'll see these things happen. You'll see the magic happen. You'll see the heartbreaks happen, but you will see them in the charts. And hopefully what I do, you'll get to see them prior to them happening. So this is where we are right now. So let's get into the nitty gritty of it, because the weekend update is supposed to be a weekend update, right? So figure out what's going on. So futures are up 6 right now. Somebody who's just price watching is like, wow, this is great. We're up 6 points. No, it's not great. We could be down 15 by the time the European markets open. And by the time our markets open, we could be down 10 handles. And if you don't believe me, you know you've gone through it. We could be very well testing the downtrend line, which I think is a viable retest, which is around 27.55. So if we drop from 27.69, where we are right now after the inverted hammer at 27.70, and we retest this downtrend line, which is a major downtrend line going back to the 13th of June 2018, which it should be a mandatory retest if you ask me. In fact, I wanted to retest that because then I'd be able to buy, I'll be excited to buy at that point. I don't want to be buying up here in this bear kill zone that I mentioned many times at 27.80, 27.75, heading towards pattern completion, which is 27.95, aka 2800 S&P. Remember the conversion, roughly 4 or 5 points off the E-minis, right? So 27.95 is 2800 S&P, the round number. I don't want to be chasing the market at 2800 SPX, because I'm not like that heavily loaded on the long side on the SPY and SPX calls, even though I said buy them for the following for July 13th and July 20th. Everyone with me so far? Yes, no, maybe?
Yep. Yes.
Okay, good.
Yes.
Yeah. So what So I'm going to put in a plug for close to trading. So what I try to do in a simplistic manner is I try to show the technicals and try to explain it to people so they understand in a very basic way. Because I will tell you, we have members, including some of our new members. I don't want to float their boat too much, who are technically more superior than I am. But you know what the biggest advantage I have? I read the algos like an open book. Because I am not human. I'm a humanoid, right? PB will tell you that. Just kidding. But Dana will tell you that. But the fact is that I read all kinds of other variables, which I explained to you the earlier part of the session, and I do not completely rely on pure technicals, which a lot of serious technicians do. They're throwing out this minute waves and that wave and that wave, and then 90% of the time they're wrong. So saying all that, market uptrend is quite intact right now. So this is the full pattern completion at 2800. Do I think we get there? Yeah, we'll get there. But can somebody fill in the blanks? Are we going to get there in a straight line up from here? Oops, sorry, let me clean this out. Is it in a straight line up and say, that's it, we're going to 2800? Or are we going to do like we always do? Like we always do, which is do this, which is where the retail emotional trader gets completely screwed up. That's why I keep on showing the levels. The first level of major contact is the last supply zone or the major breakdown zone, which is 2785, rounding off the numbers. Right there. And that was back on, wow, 20th of June. 20th of June. A month ago. Less than a month ago. So you don't think there's going to be selling here? I can assure you, definitively it will. And that can cause a move down again to retest the downtrend line at 27.55, which we broke out of on Friday. Despite the fact that everybody was just like, oh my God, that's it. It's the end of the world. The tariff thing is going to happen, blah, 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 blah. And I was nervous too, I'll be honest. Sure. I was checking things in the middle of the night. And I always do that anyway. So the bottom line is that one way or the other, we are going to pattern complete at 2800, which brings me to a very important point that I want everyone to start getting used to. Pattern recognition. Throw out all the technicals. Throw out the DMI, the vortex, the stochastics, McLaren oscillators, I already said the vortex, and all kinds of other indicators that's out there. Pattern recognition. Markets, always, every action has a equal and opposite reaction. I didn't say that, Sir Isaac Newton said that. And markets do. So regardless of what the noise is out there, it will do that. There is and I've explained this a few times, this is the pattern, and it's going to get there. Okay? And there is a Wall Street related, correlated reason, which Miss YBI, I already gave away the clue, Miss, I'm sorry. YBI maybe would be able to tell, but some of you will be able to tell because I explained it before, and having that background of working there for so long, I know. Why do you think that happens? It's a function of trading. I don't want to give away the answer. Why do you think that happens? Why does every action have the equal and opposite reaction over the short and intermediate term? I'm not talking the longer term structure and stuff like that. Like, why is this pattern going to complete? Use your brains and give me any answers. I'm not here, I'm not your professor. I'm not going to grade you on it, but I'm curious to know. And I've explained this a few times, by the way. So I'll wait for some responses from you guys.
I missed that question because my daughter walked in, but I'm thinking bell curve.
No, don't give me statistical bell curves and stuff. I'm asking you a question as to when it comes to Wall Street, when it comes to the actual money management aspect of it, why does most of the times when it comes to pattern completions, why does every action has an equal and opposite reaction over the short term? And I can show you multiple times, this crashed. I know I can give you all the patterns and all that stuff, which I do all the time, but why does it go exactly to the same level? It falls exactly to the same level, comes down. Why does range trading happen? What is that? All of a sudden they're like, oh, that place is very cheap. Yeah, it's partly true. And that's where I want to buy it. This one I want to sell it. But there is an actual money management reason why that happens. So I'm already giving you part of the answer. So this large pattern in between the short-term patterns, which are exactly very symmetrical, and I keep on identifying them all the time on my charts. Why do you think they happen? It has to do with an aspect of trading, and all you traders know it. This is pattern completion 2, PT2, and this is over the short to intermediate term. 2800 is, in my opinion, PT3, which is full pattern completion before we get a reasonably sizable pullback. Why? Think. Just give an answer. Because here is one thing about traders that I want to say. I want traders at Clueless Say Trading to think a little bit. I'm not a genius, trust me. But I do think. And maybe that's why at my advanced age of 72 years old, just kidding, okay, I sound like a 20-year-old. Because my brain works. The day your brain stops working and you stop thinking, and it doesn't matter if the answer is right or wrong. You don't get into Harvard Law School by giving the right answers. They want to see your response to the question they're asking. So I want to see your response to the question I'm asking. Why do you think that happens? And please attempt, because I don't have all night. I'm going to do the roll call. Dano, why do you think it happens? Okay, I'm going to give you some clue because none of you seem to be responding. And I've explained this many times. There are resistance and supports. Why do you think they happen? What is a resistance and what is a support? Okay, this is a major resistance. This is a major support at 2693. Call it 2700. Why? Why do buyers come in at the support and why do sellers come in at resistance? And that is the first root answer as to why we get identical pattern or equal and opposite reactions to markets. That is the basis of technical analysis. Why? Come on, tell me what your brains are thinking, guys. Go ahead.
Valuation. Valuation.
Don't give me that crap. Nah, forget valuation crap. You think the market trades on valuation? They've been telling me that Netflix was going to be a $10 stock since it was 90. They tell me that Tesla is going to be a $30 stock since it was 100. And the frigging things went to almost $400 and now it's at 300. They tell me Amazon's going to be out of business because everything, I love Amazon. Everything they're selling is cheap. They're losing money. Valuation crap. Come on. That's garbage. You know that. A growth company should be measured on PEG, price to earnings growth. If they're growing at 40% a year and the company's worth $100 billion, they said Apple was going to be nothing because, oh my God, nobody wants to buy them anymore. They all want to buy Samsungs. By the way, if any of you have a Samsung phone, I suggest if you want to be a Clueless Say trader, I'm telling you straight out, burn the frigging crap. Why? Because I don't like Korean. Some of my best friends are Korean people. It's not a racist statement. And I love Korean food. Samsungs, dump them. Okay, the whole family's corrupt to start with. They all went to jail. You ever see Tim Cook in jail? I mean, come on. Am I like a crazy nut? Buy everything in America, Harley Davidson's going to make stuff in India, which they already do. Then in Europe, and Trump's is like slamming them. I think that's the stupidest thing Donald ever did. So stupid, so stupid. Which I will plug in because new members, you should know how I think. I'm a little crazy, okay? Anytime government tells private business what to do, we used to call it socialism. And all of a sudden, it's nationalism. It's good. It's garbage. Let capitalism flourish in its own way. It's called free markets. So how is the free market if the government's telling us what to do and where to make stuff? Think about that for a minute. I don't care whether you like, I think, whether you love Melania, which I think she's very pretty, and she's a very nice person. My wife thinks so too. And whether you think Donald is your next god. And believe me, I'm a New Yorker. And I've said this many times, I'll say it again. I still have his CFO's number on my cell phone from my days, okay? I know everything that he's doing, and I know what he's going to do. Okay? And all the garbage that he's done. And all the great things that he's done too, since he became president. So I'm not the type to like go slash one side or burn. So saying all that, I don't want to get into that right now, okay? Government cannot come into American business. The communists did that in China, in Russia, and look what happened to them. Their economies went in garbage, and then all of a sudden they became rampant, rabid capitalists. Wild capitalism. That's what they are. China is a wildly capitalist, state-controlled economy. So is Russia. Russia is like wild. Just let it go, man. You're in bed with Putin, you're a billionaire. You're not in bed with Putin, you're shot. Hey, dead serious. That's the way it goes. And trust me, my best friends are the Russian mobsters in Brooklyn. Dead serious. In fact, 2 of my clients were Russian mobsters till I found out. And when I found out, I went to have drinks with them. And they're great. So we don't need government to poke their nose in American business. I hate it when good old Donald does that. Seriously. Telling companies, U.S. companies, which has made America great, that's what's made America great. To tell them what they should do? Oh, come on. And especially telling Harley Davidson? I don't want to go there. Okay? Please. Stupidest things ever. Don't dictate what business will do. Let business do, because they will do the greatest things for this country. Business creates jobs, not government. So, on that note, I still haven't got a half reasonable answer, and I'm not looking for a reasonable answer, but any answer. Dano, I asked you a question. You didn't answer. At least somebody attempted an answer, evaluation. Why do these things happen from a technical standpoint, from a money management trading standpoint? Why do patterns repeat itself? Shorts and longs are defending positions. Good answer, not good enough. You didn't get into Harvard Law School. Sorry. PB? Actually, forget Harvard Law School. The real questions are asked by Google. Google's interviews, the questions that they ask. What if your dog walks backward? What do you think is going on? I mean, seriously, they ask questions just to see your reaction. And if you can attempt that answer quickly, they'll be like, cool, the guy thinks. They don't want a right answer. I'm not looking for a correct answer, ladies and gentlemen. I'm looking for a response. So anyone who's not responding should not be a trader. That's serious. If we break through that major support line, we will definitely tank. Hey, listen, the guy around the corner running 7-Eleven can give me that answer. No, sorry, wrong. But at least you attempted. And the guy from 7-Eleven is probably making more money than most of you traders. And most of me sometimes,
So Frank, what's the answer? Why does a reaction have an equal reaction, or why do patterns?
It is, and okay, let me get there. Yeah. This is something YBI already knows. Without telling what you do keep an eye on the whole firm, correct? Yes or no?
Yes.
Thank you very much. You keep an eye on the trading desks, correct?
Yes.
This is an exciting webinar. And thank you, ladies, for that. Seriously, we should all be having a glass of wine and doing this. Maybe some of you are. And you do know that when a trading desk, especially the market makers, that's the answer. The market makers, which nowadays are very automated, but in my days when I first started, they were physical human market makers. When you bought something, what did they do? When you bought something for a client, let's say you bought 1,000 shares of Apple for institutional client at that time at like $60 or whatever. What do the market makers do when you go? I remember at the time that we started, we used to run and put the tickets through the window to get the trade done. Remember those days? Do you remember those days? Used to. I mean, most of you didn't work on Wall Street, or brokers.
Those were before my days.
Before your days, okay. So I've been around. So you actually ran through the ticket like, whoa, he's a big order. He does that. What do you think he does on his books? When a firm,
well, if you're buying it, then he's selling it, of course.
Thank you. Oh God, I'm so excited. I'm so excited that my little palm is with my wife, and they're out designing cars, and I'm sitting here, and Romeo, my other one, sleeping. I mean, seriously, you are so right. If you're buying, they're selling. In other words, on a ledger, accounting ledger, I almost failed accounting in college, okay, there's a credit and a debit column. Yes?
Yes.
Right. So if you're shorting something, if at a certain level somebody got caught, there are different reasons, but this is one of the main reasons, okay? Somebody shorted here, then somebody is losing money. So if somebody shorted, then they went long. And they need to recoup their money. And the big firms always recoup their money, ladies and gentlemen. That's the Wall Street casino. That's how it works. So what does that mean? That means they want to take it there, so they recoup their money. Mom and pop, who basically got caught buying the tops without having the luxury of these lovely precision charts and the macro channels, like all of a sudden says, you know what? Oh my God, I'm whole. God, there is a God. I'm going to go to church. I'm going to go to whatever temple or mosque that you go to, right? Like, oh my God, thank God, I'm whole. What do? They sell. That is called resistance. And at support, the ones who shorted, they're like these guys who shorted here. Okay, back in May. You think I'm kidding? This is what happens, guys. Wake up. It's not random. It's all calculated. And now the calculations are moving at a warp speed because of the machines, of the black boxes. So they shorted here, and all of a sudden the market creates this massive bullish engulfing candle, and the algos are like, man, I'm not a member of Clueless Trading. The guys at StockTwits and all these other services that are out there, like, oh my God, this can't happen. No, it can happen. No. Markets can go higher. Boom, the market kills them. As my good friend Dano says, the shorts are burning. I say the shorts are impaled, like Vlad the Impaler. Okay? So the market makers are done. Okay? At this point. So if the shorts coming in and they get to exactly the level that they should get to, pattern symmetry. Now, pattern symmetry doesn't always have to be exact. It has to follow structures. And those are the structures that I draw. This is your macro channel structure. The macro channel structure tells us that we are going to get, I showed you this is the daily one that I'm showing you. And by the way, anyone who's going to be listening to this later, you better make sure that you either have a couple of glasses of wine or lemon juice or Coca-Cola, which I never drink, soda. But your brain better be working fast because traders need to think fast. Okay? So this is the upper end of the channel, the 2840 level. And full pattern symmetry is 2880, where we were at the highs, right? Where we were at the highs. But forget that for a minute. That's where the Armageddon started back on the beginning of February. So over the short term, I'm showing the patterns where we can get what those exact levels are. I draw the megaphones. You can see that. I put a lovely magenta line in there, pink, whatever you call it. I was looking for a nice color. And that's exactly where we are. Look where we are right now. Anyone who said, no, this guy has no idea what he's doing. Yeah, I actually don't have any idea what I'm doing. My charts have an idea what they're doing. And I create the charts. Do you think I wake up in the morning, I know the market's going to go exactly there? No. The first thing I do, like, blinking my eye, like, oh, God, it's, and I get up pretty early, and then I try to take my dogs out and stuff, and then I try to get like another half an hour of sleep. And I look at the charts, and I'm like, what's it looking like? That's when I know when we open down 400 points that we're not going down another 400 like everybody else is thinking, because I'm looking at all kinds of stuff right now. So, saying all that, the answer to the question, which I don't want to, keep on sort of pushing it to the limits and boring everyone, is the fact that when somebody goes long, the market maker on the other side who's selling you the stock has to go short. Thank you, Lisa. So he has to recoup his money. And the bigger that market maker is, you can rest assured, one way or other, bull market or bear market, he's going to take it there. That is why everything has an equal and opposite reaction. Does everyone understand that right now a little bit?
Yes.
Yes? Okay. Now, it doesn't happen in a full-scale bear market. It doesn't. This is a full-scale bull market, which I've shown repeatedly on my charts. The weekly, where's the monthly? Where's the monthly? Monthly. Hold on one second. There we go. Ladies and gentlemen, this is when I've drawn, right? The Elliott wave thing, all the way from 2001, wave 1, 2, 3, 4, 5. Somebody asked me to explain Elliott wave, and I'm like, come on, man, just friggin' do it yourself. I know how to do it where a child can understand. Okay? Does this look like something that's going to crash and burn?
No.
I don't care who the gurus are on StockTwits and every other forum that you follow. Does this look like a chart, both internally on the most simplistic internal indicator, the stochastics? Okay? And the external picture, which is the candlesticks. Stochastics, candlesticks, right? It's like these Iranian names, right? Which everything ends with the IAN, right? So, or a Polish name that everything ends with like a couple of letters we can't even pronounce, okay? Or a South Indian name where the letters are so convoluted that I can't even pronounce it. So, no, the fact is, does this, honestly, and I need a response on this one, please. Does this look like a bull market or a bear market? Please, I need a response. Dano? Just say yes or no. Bull or bear? Okay, Dano doesn't have a mic tonight. Okay, he said bull. Lisa?
Yep.
Well, I didn't ask you that question yet. Lisa?
Yes, it's a bull market, of course.
And don't try to like overanalyze it. I'm just giving you the simplest thing. If I showed this to a guy from Congo or whatever, just name it, Swaziland, names that I only know, like I'm a treasure cove of useless knowledge, okay? Or somebody from New Zealand who's almost as far as like Swaziland, okay? They would say, no, it's going higher. If I showed it to a 5-year-old kid, and many of you have young children, my son's 19, my son would not even bother looking at my charts to start with, so it doesn't really matter. He'd be just like, whatever. But if I showed it to a child, what would they say? Is it going down or up? It's going up. It's a rhetorical question. Yet, every day, every afternoon, all of us, myself included too, like, oh my God, is the market going higher or lower? Wall Street's like, oh, we're going into a recession. That lady, JP Morgan Investment Banking, very smart, goes, hey, what do you think? Why the second last is so good? And I said, do you really want me to talk to you about that? You're asking the wrong guy. And I said, She said, we're going to recession in 2019. I said, oh, really? That's great. Who told you that? Your grandpa? Seriously, I said, your grandpa? And she started laughing. And I said, why are we going into a recession in 2019? Like, who told you that? You opened your bathroom door and you looked at the mirror and said 2019 recession? By the way, you hear that a lot in the news. You know that, right? Like, oh, we're going to recession in 2019. Oh, great. Last I checked, every time you know there's a recession was 3 years after it happened. Nobody ever knows before a country, a nation, or the U.S. economy that I know best goes into recession and say, oh, we're going to recession. Everybody who said that has been dead wrong for the last 50 years. We're going into recession. Oh, great. Do you know the definition of a recession and a depression? There's an old funny saying. Does anyone know that?
Yeah, a recession, your neighbor's out of work. A depression, you're out of work as well.
Thank you. Like yeah, exactly. All right. A recession is when your neighbor's out of work. Like, oh, I'm really sorry you're out of work. And a depression is you frigging lose your job. Okay? And they fire you. Exactly. This does not look like a recession or a depression. All right? But that they know. So bottom line is, at one point or another, between now, and I'm going to say this, and I'm not going to keep on continuing my forecast and stuff. Somebody asked me, in fact, Lisa did. Was there a question? Long-term forecast. First of all, I don't really do long-term forecast, but I will do a long-term forecast because I know I'm looking at this recessionary, depressionary chart, and in between my behavioral concept of what's going on. One way or the other, we are not going to have any frigging recession before before the next election, which is 2020. Yes, sir, and yes, ma'am. We're not. So if you're looking long term and you want to buy a Netflix leap a year and a half from now, 2 years from now, for 600, do it, in my opinion, because it is going to 600. Netflix is actually going to 1,000. Why? Because I'm a Netflix fanatic? No. I've watched some great shows on Netflix. In fact, one of the ones that I highly recommend to all of you, by the way, this is where we're going. We are going to go to about 3,200. Why? Because my frigging channels are showing we're going to 3,200. Not this year. Probably by the first part of next year. Now, one of the best shows I watched on Netflix, and not just the documentaries and stuff, which keep me somewhat artificially intellectual, okay, but is the story of John Paul Getty. Now, I know Dano knows it, but does anyone know the show, the series? I binge watched it from like frigging 12 at night till 3 in the morning for days. I couldn't put it down. It's a true story of John Paul Getty. And everyone knows who John Paul Getty was, right?
Yep.
Exactly. Getty Oil. Back in the, 50s? 50s, right? Yeah. 50s and 60s. The true power of America, where when we spoke, the world just shuddered. Because we owned everything at that time anyway. So there's a John Paul Getty's family story. It's called Trust. Watch it, guys. Fascinating. His nephew was kidnapped by the Italian mafia in Rome. Kid was like, he's not nephew. What am I talking about? His grandson. John Paul Getty was a nut. He was the stingiest guy in the world. He made his sons work at the gas station, which I think was great. And he lived in England. Forget the name of the place that he had a castle. He lived there. He ran his business from England. And why am I saying you that? Because this is American business, okay? Raw capitalism. And his business empire just kept on going on and on and on. He was dealing with the Arabs. He was dealing with wherever oil was. And what's his name? Sutherland. Donald Sutherland plays John Paul Getty. And in fact, he even looked like John Paul Getty. This guy is the multi-billionaire of the world, richest guy in the world. And watch that, because you'll understand why markets do what they do. And there are comments in there about him, about the stock market. He told the guys, I'm not paying a single dollar for my grandson. Yet he cut a deal with them. That's a real deal maker. Okay? So, why was I talking about this before I lose my chain of thought? Because I'm 72 years old. Is because I'm talking about Netflix. Without Netflix, I would have no frigging clue. No, I actually was on FX channel, then on Netflix. About John Paul Getty's real story. Can somebody tell me what market share Netflix has of, and I'll put the Netflix chart out there before we speak, and before you hear another analyst saying, "Oh no, they're just really bad because Amazon Prime, which I never watch. I've been a Prime member. Amazon Prime videos, great. They have some great shows too, from what I hear. It's going to kill them. What is Netflix's market share overall, worldwide? Come on, guys, take a guess. Because I don't think I even have the real answer. And in the meantime, anyone who's listening to this, these are my real charts on Netflix, guys. What do you think Netflix's share is of the global market? Come on, did I ask you to quantum theory questions? I mean, come on, I'm asking you a general question. Feel free to answer. Google it and give me an answer. I'm Googling it right now. I know the basic answer.
Yeah, I'm Googling it, so hold on.
At least
all right.
72%.
So,
what is it? What'd you say?
125 million.
I'm not asking for a number. I'm asking for a percentage.
A lot.
I love that. A lot. No.
they have 37% of the U.S.,
30?
but it doesn't give 37%.
So let me point this out, and I'm
just
gonna,
the U.S., but
it
doesn't say what they have in the world.
Thank you, Lisa. Okay. They had 125 million subs in Q1. I'm asking for percentages worldwide. 37 million. What's the population of the U.S., guys? You guys are American citizens and American patriots. What is the population of the U.S.? Come on, I need
350 million.
350 right now, right?
350 or 380, something like that. Yeah.
Wow, we actually grown pretty fast. Okay, Lisa, you're quick. I like that. I like members like you. Okay, and stood at highest 72. Netflix include Mexico. Penetration in these markets stood as high as 72% in the second quarter of 2007. Mexico, Brazil, and Argentina. Okay, that's Latin America. That's a different story. So overall, it hasn't even fully penetrated the US to start with. Okay, so when somebody talks about saturation, no, it's not. Worldwide, Netflix has less than 10% of the world's population subscribed so far. That's the world's population, not talking about Mexico, Brazil, and Argentina. So guys, what if they go to 15%? Netflix is attacking India, which is the most advanced technological nation. In fact, they have the better cell systems than us. Brains, okay? 100 million subscribers. Why do you think Amazon's putting billions of dollars into Flipkart in India? Because they're looking to basically lose their money. Why is Walmart putting billions of dollars into one of the fastest growing populations and educated populations in the world? I'll have the Indians run Silicon Valley anyway. So that is what I'm talking about, guys. This is not market making. This is called growth. So going back to this is Netflix's chart. Stop for 1 second. You look at this chart. Somebody tell me, just from a pure technical basis, okay? Look at the vortex. Look at the basic stows. Look at the basic stows. This is the daily. Where is this stock going? I've already said it many times. Where is this stock going?
To the upper end of its channel that you have marked there.
Right.
So that makes it looks like 470 or something. It looks like at the top of it.
Lisa, no. It's not going to go to 470 that fast, because along the way, there's going to be hiccups. But the stock is going to at least hit the ATH all-time high based on the candle. And these little things that prop up, these are actually the MACD crossover buy signals generated by the system, not me. But just looking at this, is there any doubt, unless barring other black swan events, loss in subscriber growth, all of a sudden everyone said, no, I watched Trust and I really hate that, and all the great shows on Netflix, and like, oh, that's it, I'm dumping Netflix. Aside from that, it's going to at least 425. So right there, from a trader perspective, you have 28 points to trade. What's that going to do for your options? A lot. Upper end of the channel, where you're saying 470, yes, it's going to go there. But nothing happens in a straight line. Along the way, this is what it's going to do. It even might come and retest the 396, the lower end of the channel. It breaks that, that means something is going wrong. But bottom line is, the general short-term, intermediate-term targets are all-time high. You can construe that as a cup with a small pullback, normal profit taking, and an attempt at the mid-channel drawn here at 439. Lots of there's going to be lots of profit taking at that level. Don't know if it's going to create a handle back to 425 or lower, but one way or the other, sometime by the fourth quarter, in my opinion, or maybe sooner, because Netflix is a beast, it's going to get to 470. But I'm always looking to capitalize on the short term with an eye on the bigger picture. So short term, got a lot of money to be made. And I don't want to sit here. Yeah, go ahead.
Frank, is this one? I know we traded some options in it last week, and we bought the 713s. Is this one that you've consistently, like, you trade this one like every week, basically?
Consistently, I trade this, both as a day trade, as a swing trade. When things get like this with Netflix, right? Like it did over the past couple of weeks, before this beautiful candle breakout on Friday, you have to be wary. 1 second, let me show you. This is pure trading stuff. At this point, the stock basically went quite a bit, right? When the big sell-off came on the Qs, those hedge funds were blowing up for different reasons. They had to sell a lot of stock. Netflix is one of them. You started to create this was actually looking like a bear, believe it or not, it was looking like an ascending triangle, which is bearish. See that right there? But then this was getting deep oversold. I was looking at things in many different ways, and then the stock did what it's supposed to do. It broke above the downtrend line, and this was more. And I said this repeatedly on my alerts. This was still a bull flag. We have a great trader who's a great lotto trader. I'll say his name, Bob. You'll see him. He's a big lotto trader. It's like, that's it, Netflix is going to go to 360. I said, okay, exciting, that's great. Maybe he was right. He's very good with lotto trades. Lotto trades mean very cheap trades, short time frames. Okay? And I didn't think that was going to happen. Generally, a bunch of you will be right or sometimes better than me on a couple of trades that you do, specifically in the short trade on certain things. But knowing the bigger picture that I showed you, I tend to be bullish biased with an eye to make some short trades for quick gains. So I said, no, I don't think it's going to happen. And I was dead right. So is that the first time? No, it's a lot of times. So you can't bet against these stocks because these guys are some of the highest growth companies in the world. Now, it is still within a range. Let's look at that's for 406. I'm sorry, 405, 406, which I said my short-term target would be. I said that when the stock was at 392, and that's your trading range. Right there is your trading range on this stock. So as a trader, Forget about long-term forecasts and whether their penetration is what it is in India or they haven't even entered China, for God's sakes. Facebook has not even entered China because they're blocked in China. What if they enter China? What if they've cut a deal? They are. What's going to happen to the stocks? So bottom line is this is in a trading range. So it can still vacillate between 405 and 392. But the overall picture is bullish. But saying all that, it is also an extremely, and this is very important for all of you guys, this is an extremely hedge fund day trading dominated algo HFT stocks. What does that mean? It simply means they're trading this stock like a beast every day. Popping it up 8, dropping it 4, moving it up. So if you're thinking that you're going to just buy this and just go to sleep, yes, you can if you're not watching the stock on a daily basis. If you're trading it, you better watch it like a hawk. But when the risk-on market comes, which is basically, money going into stocks, Globex, it's risk-on right now. Holy cow, we're up 11 points on the futures. Then you better be playing these stocks hard. Am I clear on that? You better play these stocks hard. You want to be analyst, not even an analyst, an analyst. And I always tell traders, stop analyzing balance sheets and earning statements and when numbers come out of companies. Come on, I did that for so many years. It's all garbage. You'll never know what the actual reaction of those stocks will be and what some of the smartest analysts will put a price target on. How many times have we played reversals, which have been the biggest money? I don't need to get an answer. We've played it huge amount of times. Where the stock is down 10, 15 points. Restoration Hardware down 10 points after hours. And that was not this quarter. This quarter just ramped. But it was one of the biggest winners. But last quarter, remember, it was down like 10 points and boom, next morning it turns up and goes up 35 points. Same thing happened with AutoZone. So if you think you want to be an analyst or whatever, I suggest you quit that job, okay? Fast. Because even the best analysts are wrong. So, saying all that, where are we right now with the futures?
Up further.
Up further. Yeah. Very proper. I like that. Up further. We should have tea sometime. Just kidding. It's a very proper English. Up further. Okay, that's great. Yes, we are up further. So bottom line is this is what we call the bear kill zone. Right now, the shorts are like, holy cow, this is it. And they're covering. This is the pattern completion 2. Exact. And we are going to go to 2784. So if we open up tomorrow, and this could be the Brexit thing, other things that's going on, we are going to 2785. So one way or the other, unless there is a full-scale breakdown of this breakout zone, which was pattern completion 1, this was PT1, right? That's why it's a thick green line that I showed weeks and weeks ago and was validated after the breakout of this was actually PT1. Pattern, the resistance 1 on the big range level. Everyone see that, right? That was your range.
Yep.
That was your range, okay? So it broke out of that range. So what do? You sit there and say, that range is completely going to fail. Oh, yeah, I know it's going to fail, because everybody out there, the gurus on StockTwits and other forums and stuff, because I follow StockTwits quite a bit. There's smart guys in there. Oh, man, those smart guys are so wrong so many times. It's almost, it's sad. But I watch them because they're good sometimes. Do I think I'm smart? No, I honestly don't. And believe me when I tell you that, I am not. Am I very smart when it comes to overall global economy and markets? I'm very smart. Trust me. But am I fantastically smart on technical analysis and stuff? Not really. But what makes me really smart are my charts. Go tell everybody that. All right? So bottom line is, this is pretty scary. Because right now, if you're short with a whole bunch of S&P puts, you're not sleeping at night. You're not. And regardless of what happens tomorrow, what are you going to do the first thing on those puts? You're going to take your losses real fast right at the open. Yes or no? I've been there, so I know. Yes, exactly. And that could be a capitulation move higher, which means the market has topped. The market will top short term at 27.85. Just the way I said, if this pops, better watch out. I did not think personally, and I'm not a liar, okay? Straightforward. We were going to have this on Friday. I really didn't, or else I'd have loaded a lot more. But neither was I. Neither was I, oh, short everything in sight. I simply said, buy some VIX puts, which were cheap, 90 cents, just in case. And we had our longs. Yes or no? I know the answer is yes, because it's right there on my Twitter feed. So right now, it's very scary, guys, for the bears. But we don't have that much to go. Don't get too excited. We got 12, we got, if we 10.25, Europe's going to open higher. China opened higher. So, I haven't checked yet. So we just, Europe opens higher. We could be at 27.85 right there at the open. So what do? Get like, whoopee, that's it. Market's going higher? No, because this is going to happen. You're going to pull back. So before this is going on for too long, so I gotta stop this madness here with this session. Okay, just kidding. But honestly speaking, look at this pattern. Okay, this pattern. So call this this was your range. Okay, watch carefully. Watch carefully. We were supposed to do this if we remember. It's a mirror image, right? Mirror, mirror on the wall. Who's the fairest of them all? Who said that? Who said that? Are you guys like real? Thank you, Dano. Dano's the only one who knows Snow White. I mean, you guys must be like totally, completely like. Don't get offended. You guys American? I mean, come on. Snow White. Thank you, Dano. Kaboom. Yeah. Mirror, mirror on the wall. Who's the fairest of them all? Come on, guys. Wake up, all right? That's what happens when everything is all LeBron. And I love the guy, okay? And everything is freaking Lakers. 154 million. What the hell's wrong with this world, okay? He should just take all of that and build Chicago's inner city. Honestly, he should. I mean, it's like nuts. It's gone wild. Everybody knows all that stuff, but no one knows the basic facts of what's going on in Silicon Valley or what's happening with Snow White. I'm just kidding. Disneyed out, okay? I don't care, Disneyed out. You grew up with Snow White and the Seven Dwarfs. Retail investors are like those 7 frigging dwarfs, okay? So anyway, I don't want to go into that, but seriously, Dano, thanks for saving America, all right, and Disney. So bottom line is, this is your mirror, okay? This is you on this side. And this is the other side. It's an exact pattern symmetry. And we are going to hit this move here. So if it's an exact pattern symmetry, a child can actually draw this much better. Seriously, a kid, if I take this to kindergarten tomorrow or first grade, second grade, they will basically show you exactly what's going to happen by replicating what happened on this side. Guaranteed. They don't need frigging hardcore technical analysis. They will simply draw this, like I'm doing. Okay? So here's your range. And here is the other side. So other side hits this. Remember? Then what happened? This, you pull this. You think I'm kidding? Been doing this for years, okay? And then this pattern, which is this. So, you don't think that we can pull back to this level? Well, believe me, we can. That's good old 20 points, a good old 100 to 120 point drip to flush out the late longs. But at this point, we have broken out. Is this guaranteed? None. This could disappear first thing tomorrow morning by another announcement coming out of Downing Street. What's 10 Downing Street, guys?
Oh, come on. Everybody knows that, Frank.
I just shut up, PB. I'm not asking you. What's 10 Downing Street, guys? Seriously. Okay, they don't know. Great. What's the White House? Seriously, this is Sunday night. I'm having fun, okay? The White House is where our president sits, right? What's 10 Downing Street in London?
The government office for London. I just Googled it, okay?
You
It's
just
the
Googled
president,
it.
prime minister.
It's the Prime Minister's office. Who is the Prime Minister of England? The second most powerful nation in the world. And our allies. Theresa May. She sits at 10 Downing Street. It's a lovely black wooden door with a gold handle you knock on. So this is what I'm saying. Americans in general we are the most ignorant people in the world. No wonder we get screwed by everybody else. Okay? We don't even know our biggest allies what 10 Downing Street is. Don't take me the wrong way, Lisa. At least she Googled it. Everyone else like 10 Downing Street? Is that an old bad British show on BBC channel? Seriously, guys, wake up. So we could get one more announcements out of 10 Downing Street, Theresa May on this thing, and you could get Europe collapsing 200 points tomorrow after they open at 4 a.m. our time. Okay? Seriously. So you could get this real fast. Now that you know 10 Downing Streets, you know my charts. Seriously, we could get this. In fact, I'd like that. Because by the time it gets here, it's too late to really load up. Because right here, you're going to get this lovely red arrow that I put out there. But we're going there. Now, whether it takes a detour, let me finish. Whether it takes that detour, whether it pulls back a little bit to retest this major breakout, I don't know yet. So I'm going to be monitoring that. Yes, go ahead, ma'am.
Okay, so the red arrows, just so we're clear. So those you just put those up there, sort of arbitrarily, where specific things intersect.
Hold on, arbitrarily?
Okay.
This is good. I love that.
I love that. Okay.
I don't put anything arbitrarily. And most Americans don't even know the meaning arbitrarily means. Ask half of Donald supporters what arbitrarily means. They'll be like, what's that? What's that? Okay? Seriously. That's a beautiful word that you used. No, I never use anything arbitrarily or based on my emotions. And I'll tell you why I use it. So let me just get rid of this frigging arrow so I can show you. I never, and that's a damn good question because you always ask good questions, Lisa, in the short time that I've known you, is I never do anything arbitrarily. Why do you think I have this big fat red arrow here? Why? It's so simple. Why?
Because it's an intersection of.
It's not an intersection. Okay, let me just say in New York terms. That's when people lost their frigging pants. That's known as a major crash zone or supply zone. That's where the market crash started on this cycle. Intersection. That's where you basically got clobbered so hard, or not you, but mom and pop, and they're like, shit, I love Donald, but I ain't buying no stocks. I ain't buying no stocks. Seriously. That's not an intersection. That is a major resistance level because that's when the crash started. Try to recoup, doom. This red arrow is not there for visual stimulation. It's there because that's where the bad things happened. You get it? So, very important question you asked, and I think I gave you a simple answer. Those are major supply zones where major amounts of supply or sellers came in. And why did they come in there? Because when this was happening, what is this formation, guys? You know this formation. What's this formation? Quick, please.
Inverted head and shoulders.
Exactly. Thank you very much. Inverted head and shoulder. That's bullish. A lovely bullish formation, except it got almost kissed. It's almost like you're going towards your first love and you want to just give him a big hug and a kiss and he just says, see you later. I'll call you next week. And he never calls you. Right? She's like, oh my God. And you're like waiting around for 2 years. Like, oh, why didn't he call me? Because he doesn't give a shit. Okay, excuse my French in New York, okay? So he doesn't. The market didn't give a shit because when this happened, this inverted head and shoulder, it almost got there. It was supposed to get to 27.89. It never got there. It just said, Bye-bye. See you later, Lisa. I'll give you a call next week. He never did. And you probably never even found him on Facebook. So bottom line is that this is a dangerous point. So you can see that there was a major sell levels for different reasons that happened at that time. And this is, of course, the big one. Now, the big one that I'm showing you is simply because I'm looking at the June 13th as the most relevant technical point that I'm working off right now. Anytime that you build a model, you have to look at the last relevant point that you are comfortable with or that you're looking at and then draw the lines off that. Is everyone clear on that one?
Yeah.
Exactly. So there you go. So this is not arbitrarily. This is where, like we all say, shit hit the fan so hard it's not even funny. All right? And people lost, and funds lost billions of dollars. Billions. Okay? This is not a joke. So obviously that and between the market making analogy that I drew, which is reality, and people recouping their money, there are people in the market, because I've dealt with other people's money, meaning like institutional money and stuff like that, who never sell. So when they get up to that level, they're like I said, they start embracing God and Joel Osteen. Okay. So bottom line is, and Reverend Billy Graham, all of a sudden they see God, like, oh my God, God has graced me. I'm back to even. Thank God. And they get out. And that's resistance. Market vacillates around, makes a new high, takes it higher, and they're never in the market. So that's it. So that's the reason why it's there. All right. So guys, 10:27. What time did we start? We started at 8:30. This is long, but it was very good, guys. It was very revealing, and good question. And right now, I'm going to last chart that I'm going to show you, which is really a technical chart, aside from all this stuff. And I noticed this. No, actually, it's here. Something happened, which my good friend Dano showed me a while ago. Aside from my beautiful megaphones and all that stuff, look how perfect these charts are. It's almost sickening. You know why it's sickening? Because I'm not that heavily loaded SPX and SPY calls on Friday. Honestly, I have longs, but I'm like, it's sickening because I'm doing this stuff, but I'm not completely involved in it. So what does that show? That a guy like me who is overall bullish is placed, and this is really important for all of you, who is moderately positioned going into the opening tomorrow, which could be a 20 handle plus opening, is moderately to the lower end position. And of course, I'll react as we move forward. And what's the rest of the world doing, who are always calling for a bear market? They are not only short, they're not even long. That's what I say. The pain of regret, the pain of sacrifice, of buying tactical lows is far, the pain of regret, of not having any position is far more painful, guys, than the pain of sacrifice, i.e. buying tactical lows and seeing your P&L in the red for that day. So here is another thing that happened, and I'm going to end the session. What is this pattern, ladies and gentlemen? Somebody please mute the microphone. It almost sounds like a... There you go. Thank you, sir. What is this pattern? Quick, guys. We don't have all night. Head and shoulder. Dano knows that. What is this pattern? You guys really see that? Huh?
Triple top?
A triple top? No. You need to really brush up on your technical analysis. Big time. No, I'm dead serious. Don't laugh. No. And YBI. Relax. A triple top is this, where it's even. Okay? I'm not blaming you. Go listen to my basic chart pattern analysis, which I know you will do because you just signed up today. So everyone, welcome YBI. Excellent, member. And then go through that, and you'll know everything. No, I don't blame you for it because you don't know. You can't blame somebody who doesn't know something. You blame somebody when they know something and they see something different. So let me show you. One top, two top, three top. That's known as a head and shoulder, what we call HNS, not H&M, HNS. Okay? An inverse head and shoulder is this. This is an inverse head and shoulder. Watch. That's a head and shoulder. There's multiple inverse head and shoulders, but you can call this an inverse head and shoulder. Head, left shoulder, right shoulder. Everyone see that clearly? I know most of you know. So, is the head and shoulder bullish or bearish? And people who know, you feel free to answer. People who don't know, I mean, seriously. Lisa, is the head and shoulder a bullish or bearish pattern? Any answer? Or did everyone just...
Dano answered.
Bearish.
Yes. Dano answered.
Yeah, but
Yeah.
Dano's not your lawyer. I'm asking you. Is this a bearish or bullish pattern, a head and shoulder? This is one of the most simplest and most critical components of technical analysis. I know you know the answer. Is the head and shoulder bearish or bullish?
It's considered bearish, yes.
Exactly. Not considered. It's frigging bearish. Okay? What's an inverse head and shoulder? Well, you know the answer. It's bullish. Okay? So, the head and shoulder here was very prevalent for a while now. For a while, okay? This was your head at 2700, 2800 S&P, 2800 plus, or 2792 E-minis. Here's your left shoulder. Here's your right shoulder. What did we keep on doing till Friday? What was the 6th? The Friday? Yeah, okay. Somebody please mute the microphone. There's too much, buzzing noise, and my brain's already mush. Okay, thanks. So this was a head and shoulder. This was a bearish head and shoulder pattern. What happened here? It basically said, don't mind me saying this, guys, sorry. It said, F you, see you later. I'm going straight up. Because I want to go straight up. I don't care whether the tariff war, whether Trump's tweeting at 5 in the morning, whether Melania's throwing him out of the White House, and whether the Chinese are going nuts. Their markets are collapsing. Xi Jinping's having a fit. Okay? The markets are saying, see you later. I'm going up. Well, guess what? That's exactly what it did. We broke out of a major head and shoulder, hitting my, okay? Not the markets, my megaphone pattern move right here at 2773. Look at your E-mini screens right now. Where are we? 2773.25. Where did I draw these lines from weeks ago? 2773. Do I need to even say anything more? Why we shouldn't have 1,000 members making money off my trades and my charts? Seriously. So, bottom line is, this head and shoulder I was waiting for this. I didn't know it was going to happen. I realized it was starting to happen when this bullish engulfing candle took away 1, 2, 3, 4, 5, 6, 7, 8 days worth of a trading range. Does everyone see this? This is not hard, guys. This is just observation and simple numbers counting. Anyone who can count from 1 to 10 can do this. Okay? So here was the trading range, 2727 and 2700, or close to it. So roughly 30 points multiplied by 7, roughly 200 to 210 point range on the Dow. Not the end of the world like all your other services and StockTwits and whatever. I shouldn't keep on saying StockTwits. They'll probably send me a letter. Why are you mentioning StockTwits all the time? Because I love StockTwits. I have 33,000 some followers in there. And I don't get a chance to post that much. And there's a lot of gurus out there who are very wrong. And a lot of people out there who are very right. Not a lot, few. So, bottom line is, when this happens, what do? You don't have to think. You got to go stay long. Doesn't mean you can't take profits along the way. I do. But you got to stay long. You got a massive, this is what a head and shoulder looks like, okay? Here's your neckline. This was the neckline. I kept on showing 2700, 2790. 2780. You break that neckline, we're testing the good old 2600, 2620 level real fast. Look at my old videos. I've said that. This is your head and shoulder. There, head, shoulder. and we just punctured it. We just went through. I mean, from a pure technical standpoint, without really like slicing and dicing and wringing your hands and like, oh my God, is this arbitrary? Is this like compulsory? Is this disciplinary? You know what? It's a frigging technical breakout. But it is hitting the upper end of the megaphone, where we also have major supply zones that I showed repeatedly in my previous charts. That's around 2780, 2785. This is not rocket science, guys. And everything that you do out there is going to be dominated by what happens on this end. On that note, have a great evening. I think it was a great session. Welcome, Lisa, YBI, everyone else who attended, everyone else who listens. If you don't think that we're delivering the goods, then I don't know what the heck you're thinking. Because how you're managing and positioning your trades and stuff, that's your business. You want to learn the specifics, or at least not learn, but at least understand some of the dynamics some of the things that have worked for me. Sign up for the advanced coaching sessions. The rest of it on my charts is gravy. But if you don't understand my charts, and if you think it's time to get super excited at this level, you're dead wrong. This is Clueless Day Trading. Keep your emotions aside. Stay fixated on the charts. Try to understand it. Try to play them. We have selective trades which have gone berserk. We have some trades that haven't worked and have still worked. Taken a little bit longer. Spread the word out there and have a great evening, guys. Good night.